I think the most dramatic example of it to us was the behavior of Bitcoin last week. It absolutely took off. It was a flight to safety vehicle. And so it is really proof of concept that innovation solves problems. There are, in Bitcoin, fully decentralized, fully transparent, auditable, which is addressing all of the banking's problems right now.
ARK Invest CEO Cathie Wood discusses her bullish outlook on Bitcoin, as well as the current banking crisis we're seeing unfold. Cathie says that ARK's strategy this year is to invest in disruptive innovation like Bitcoin, which she believes will reach six figures in less than a year. She also points out that while banks are addressing liquidity issues, they are not addressing solvency issues, which will lead to more and more bank runs. Wood highlights two significant recent events that caught banks off guard, including a massive interest rate increase at 19-fold in less than a year. With deposits leaving the system due to venture capital facing a funding drought, many others will naturally gravitate towards money market funds paying higher rates. Wood believes that innovation can solve problems, and Bitcoin is a prime example of this, providing an insurance policy with its decentralized and transparent nature. Let's get right into the interview with Cathie Wood. If you enjoy the content we do here, don't forget to hit the like button and subscribe to the channel. Let's get right into the video.
One of the things that happens in a crisis is liquidity dries up. So that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive. We do believe that the behavior of the price through this crisis is going to attract more institutions, for example. We've done a report targeting institutional investors and the allocation that they should make if they care about this new asset class diversifying their portfolios. And I believe it's somewhere between 2.5% and 6.5%. Well, I think they're addressing the liquidity issue, but not really the solvency issue from our point of view. A couple of things have happened here that have never happened really in history, and so the banks didn't expect it. The first was interest rates up 19-fold in less than a year. Never happened. Under Volcker, which it was twofold, 10 to 20%. And the low base does matter. Many people dismissed it saying, oh, just such a low base. No, expectations were low base. So that was the first. We've never seen that magnitude of an earthquake, I would say. Then the second thing that no one expected, again, because it hasn't happened in such a long time, was deposits leaving the system. For Silicon Valley Bank, it was venture capital facing a funding drought, and so they had to draw down their deposits. But then for others, you've got money market funds paying much higher than deposits, attracting flows. So that combination was lethal. And so now they have the backstop in. Now what do we have? They're going to be paying up if they're depending on the facility. They'll pay roughly 4.37% right now is that rate, OIS plus 10. And that's much higher than many of them have been paying for deposits, number one. While in the case of Silicon Valley Bank, their average held to maturity security on the asset side of their balance sheet was only 1.6. So they're going to see net interest losses. Now, instead of having mark-to-market hit equity, these losses are going to hit earnings. Before COVID, as we were descending into that, and we are saying now, innovation solves problems. And you showed a few charts at the beginning that suggest that some of the innovators out there are solving problems. I mean, I think the most dramatic example of it to us was the behavior of Bitcoin last week. It absolutely took off. It was a flight to safety vehicle. And so it is really proof of concept that innovation solves problems. There are, in Bitcoin, fully decentralized, fully transparent, auditable, which is addressing all of the banking's problems right now. And so a flight to safety, a little bit of an insurance policy. There's no central point of failure in Bitcoin.
We know you're a long-term investor with long-term calls, but what on earth gets us to that bull case of almost $1.5 million per Bitcoin if a bank crisis doesn't?
Well, one of the things that happens in a crisis is liquidity dries up. So that tends to hurt assets. And the fact that Bitcoin moved in a very different way from the equity markets in particular was quite instructive. You'll find the building blocks of those price targets in our Big Ideas 2023. So ARC Big Ideas 2023. And they are, for the base case, I would suggest quite conservative. We've dialed some of them down since last year. I know that corporate treasuries pulled away from Bitcoin because the regulators were pulling them away from Bitcoin on their balance sheet. So we've pulled back there. But we do believe that the behavior of the price through this crisis is going to attract more institutions, for example.
We did see signaling from the Fed. They did tell us they were going to be hiking rates and hiking rate fast. Why then didn't you move your portfolio around more?
Well, the premise of the question is that we're an asset allocator. We are not. We invest exclusively in disruptive innovation, nothing else. What we did do was we concentrated our flagship strategy, so ARKK, and our other strategies, ARKQ, ARKW, ARKF, and we moved in the flagship's case from 58 names in February of 21 when we peaked down to 27, 28 names. We have a scoring system, and the scoring system is based on variables we believe are very important to innovation. And so we concentrated the portfolio. Many people in the traditional asset management world, when they go through a risk-off period, they will diversify their portfolios by moving closer to their benchmarks. What they're doing is typically selling our kinds of names.
Yeah.
That is why they're putting extreme pressure on them. We'll create losses by selling stocks, and that gives us a tax loss asset, which we have. It's over $2 billion right now, against which we can take future gains, and then concentrate towards our highest conviction names. We have a paper on our site which shows the benefits of this concentration strategy during risk off and diversification strategy during risk on.
Cathie Wood notes that Bitcoin's behavior during the recent crisis may attract more institutional investors to the asset class. Although regulatory pressures have caused some corporate treasuries to pull back from Bitcoin, Wood believes that the asset's long-term potential justifies a significant allocation in diversified portfolios. As CEO of an investment firm focused exclusively on disruptive innovation, Wood explains that ARK Invest has yet to diversify its portfolio in response to signals from the Federal Reserve regarding rate hikes. She argues that ARK's strategy is similar to that of a venture capital fund with a long-term investment horizon. Overall, Wood sees Bitcoin as an important investment for institutional buyers, with its potential to attract more investors to the asset class. She also believes that if her firm is right about the companies it invests in disrupting the traditional world order, the market will adapt to ARK's strategies and move away from traditional benchmarks. What do you think about Cathie Wood's latest prediction for the market in 2023? And what direction will Bitcoin go in before the first half of the year is over? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.